Hello and welcome back to this beautiful Monday on Crypto. Oh my God, I want to talk a little bit about these equity tokens. A lot of people are calling them different things. Are they shares of a company? Are they trading on chain? Just what the hell are they? There's some mixed messaging. Let's get into it. Bang! So straight out of the gate, last week we saw ETHCC out of Cannes in the French Riviera. A beautiful place. And of course, Vlad, the CEO of Robinhood, he took to the stage, epic background, busted out a chalkboard in a very nice kind of novel visual fashion and announced these tokenized US equities. For now, they are available to EU, non-US retail buyers, but the underlying kind of remains the same as they do work it out for the US. And of course, big announcement here, Robinhood gives out tokens of OpenAI and SpaceX stock in Europe. Stock hits records. Robinhood, very, very bullish, right? All this stuff starts to happen. We're seeing the ability to use your shit coins to buy stock, SpaceX, OpenAI shares. Cool concept. But OpenAI immediately comes back and it says, hey, these OpenAI tokens are not OpenAI equity. We did not partner with Robinhood. We're not involved in this, and we do not endorse it. Any transfer of OpenAI equity requires our approval. We did not approve any transfer. Please be careful. Now let's get into why they're saying this, because with any private company, there are what are called transfer restrictions. A CEO and the managing team can oversee all of their privately held shares. This is basically to maintain control. You don't want your employees just going out and, dumping tons of shares for maybe half the price, maybe a quarter of the price, maybe for cents on the dollar. This would impact your valuations. It would impact your ability to raise capital in the future. And it would really just fuck your narrative. Like, quite frankly speaking, this would be a loss of control. So companies do not permit this. Even in a publicly traded company, let's say Meta, you're issued shares as an employee for a bonus. You can only sell those within specific parametered times. This is a way for companies to maintain their trajectory, just really basic concepts, right? Now, for private markets, unlike public, this is a much tighter market. Sometimes they can permit shares, especially if we're looking at earlier buyers that want to exit in an active raise. You can say, hey, look, I've connected a buyer with a seller and somebody's just going to OTC you. Everyone can be happy, right? Early buyers can exit, newer buyers can come in, but this, again, has to be a controlled flow. You don't want open market dynamics doing price discovery on a private business. You want your fundamentals, your profit, your revenue, your employee output, everything like that to go into the materials that go to the next fundraise. So anyway, taking the public market concept of an actively traded market and using private equity is a very confusing thing. This is why a lot of tokenized equity and real estate plays like T0 exchanges that do securities, they just haven't been lush with liquidity. They found a lot of issues there, and that's because these things just don't trade very often. They don't have high turnover. But of course, Republic, my alma mater, and I still have a lot of work that I do with them, so great team, and they come out and they say, hey, invest in the performance of the world's top private companies. And of course, what do we have? We've got SpaceX, Anthropic, Epic Games, and OpenAI, along with an abundance of other companies that are coming up on this concept. Now, unlike Robinhood, Republic is going to offer this to US investors. They're going to do US retail through the Reg CF crowdfunding license. That only allows them to sell up to 5 million, but through Reg D accredited investors or even a Reg A plus, they could go way above. Now, that is all assuming that these numbers don't change in the near future. There could be something under the Clarity Act that allows them to offer much more to the crowdfund portal. Again, 5 million is a small amount when you're talking about all the mom and pop availability, but for now, they have no access to companies like SpaceX, like OpenAI. There's just no way these people want to take small denominated dollars. They're taking it from funds. Now, this comes back to OpenAI saying, well, this isn't us. We didn't approve these transfers. But of course, they did sell it to funds. And these funds often have a vehicle called an SPV, a special purpose vehicle. They can put the company equity inside these vehicles and basically split that into shares. Now, SPVs do have limitations. There are about 99 people per SPV, and they all hold shares. But you can take shares of an SPV out. You can move them back in. Basically, I'm saying you can swap that cap table around. Money can alternate. People can sell shares of that SPV to new buyers. And in that way, the equity exposure can move around, but the underlying ownership still sits within the SPV. So this is what it comes back to, right? These OpenAI tokens, they are not OpenAI equity. They are not ownership in the company as protected by law. And this is very important to understand. What Robinhood is offering here and what Republic is offering with the mirror tokens is not true ownership in these companies. You don't have voting rights. You do not have all of the legal protection of the public markets. But what you do have is price exposure. You have the ability to buy today and hopefully sell at a higher price tomorrow. So maybe this is a decent trade. And to really understand this, there's nothing like the Bloomberg opinion money stuff from Matt Levine. And he calls this naked SpaceX forwards. But a lot of private companies restrict their sales on stock, and he gets into the whole thing. And he says, well, a lot of people want to solve this problem because there's a lot of money to be made. We talk about solutions from time to time. Often, if you do get your hands on a stash of SpaceX shares, you put them in a box and you issue shares out of the box at a large premium to the value of the underlying shares. I described that in the SPV narrative. This is a forward contract. This is the concept that is actually being implied here, which is to say, I own 100 shares of a private company that I am not allowed to sell. Again, they require approval to sell these shares. You want to buy the shares of a private company. We sign a contract that says that when the company goes public or gets acquired, I will give you 100 shares of it. So when those transfer restrictions are unlocked, I can finally send you the asset you pay me. However, you give me the money now in exchange for the shares later. This is a forward contract, right? An agreement that will be bound by law. Now, there are problems. People can sell a forward contract multiple times. I've seen it happen. They can sell a forward contract without actually owning the underlying, which is something that I've encountered as well and is truly maniacal. But again, when you get into the sociopathy of traditional finance and lots of money, there's a lot of crazy things out there. He goes on to discuss another way, which is maybe the naked forward contract. Says you want to buy private shares in a hot company. We sign a contract saying when the company goes public or acquired, I'll give you 100 shares of it. You give me money now in exchange for the shares. Now, Matt goes on to talk about the naked version, which is basically the same thing, right? You want to buy the shares of the company. We agree on a contract that I give it to you when it goes public. You give me the money now. The difference in this example being I don't actually tell you that I own these shares now. So in this example, it might be that I get the money from you today, and it's my responsibility before this company goes public to go out and grab and acquire these 100 shares. That will now be on me. That is where the risk is, and I could take that risk. So this is very much what is actually happening here. He even talks about it. Republic CEO Ken Wynn said he's confident in the token's legality, but it's possible that regulators might take a different view. He says Republic won't need permission from the companies whose tokens it's selling because the tokens represent securities sold by Republic. Again, these are those contracts that we're talking about. Basically saying we are signing a contract that says when this company goes public or is acquired, I will give you 100 shares of it. That is what Republic is issuing at present, and it is their obligation. Now, they can acquire these shares by getting them from funds, from private holders. There are a lot of people looking for liquidity. So these buying opportunities do exist. And if they can go out and get them today, well, then that's a pretty good bet that you're going to be able to make do with what you're selling and be able to uphold this agreement. And what they will really owe back at the end of the day, because these are not actual ownerships, is to say that whenever these companies go public and they've issued you these mirror tokens, well, they can now sell those for the upside and reissue you dollars back in return. Let's call them stable coins because they probably will be on chain. And that might not be what you hope. Really, in the case of Circle's coin, for example, if you had bought shares just before IPO, let's say you get them at $20 and it IPO'd at 31, right? They would cash you out at 31 and give you that $11 back. However, subsequently, the Circle price rallied from $31 to like $431, and you would miss that upside. That is the major element that is missing in this. You do not have the actual ownership. You really just have that price exposure. So there is some risk, but that being said, there is no other way to get that financial exposure into these amazingly hot companies. So this is something to understand. The risks are quite frankly obvious and they're out there. This is how it works. You are getting exposure to the upside of these companies, but you are not getting actual ownership. Is this Web3? I would say no. This is on the blockchain rails. To me, Web3 is all about ownership. It's all about privacy and sovereignty. So is this similar to a true on-chain asset? Not so much. These shares are going to exist inside of a private vehicle that is then issuing and reflecting its mirror shares onto the blockchain. And the idea being that with lots of interest in this, the blockchain will facilitate, as long as you're KYC'd, transfers. They have a transfer agent. You will be able to enter and exit your position in a SpaceX mirror token and things to that effect. However, is that truly on chain? Is that truly blockchain? I mean, no, not so much. But we're beginning to unpack some of the possibilities that we can do when we blend true regulated environments with on chain environments, really taking the blockchain's use of 24/7 markets and very cheap settlement fees. That is the feature that you're getting out of this. The rest of it is very standard legal alchemy, and it doesn't even really require a blockchain, to be honest with you, but the blockchain does add some nice features. So is this like a Bitcoin? Is this like an Ethereum, a cryptographically secured asset that sits in your self-custody? Absolutely not, and you should not be fooled to think that it is. However, it is an opportunity for something that doesn't exist out there, which is for you to buy, $50 worth of OpenAI exposure. And to sign off with it, I really will close out with Matt Levine saying this is an obvious solution to a real problem, or at least a market imperfection. The problem is that people want to buy SpaceX and they will pay a lot of money for them, but there's not enough shares to buy. The solution is for someone, and why not Republic, to make up a new synthetic shares and sell them. Synthetic goods are not quite as good as the real ones, and one can worry about the counterparty risk. And it's a bit of a shame that it's all wrapped in crypto, but nothing really turns on that. Ultimately, this is a very traditional bit of financial engineering. People want SpaceX stock. SpaceX won't sell it to them, or so someone else will. Or someone will sell them something anyway. So that kind of wraps up what's going on with all of these private company shares. Even though OpenAI is pushing against it, there's not much that they can do. As long as they sell them to somebody, somebody can sell that promise of those shares in the future. That is what's happening now on both Robinhood, on Republic, and it is expanding the base for what blockchain can facilitate. So is it interesting? Yes. Is it Web3? I would have a hard time saying yes to that. With all this being said, now you know a little bit more. As always, stay safe out there, and I will see you tomorrow.